A special order is a one-off order, all right? Of course, that may be accepted or rejected depending on whether the order will result to additional profit to the organization or a company will incur loss as a result of undertaking the special order. So generally, when a company is operating below the installed capacity level, okay, when the company has idle capacity, the special order may be accepted or rejected depending on the operating performance that arise from the special order. So one thing you need to understand as per special order is that a special order is a one-time order which may not occur going forward. Two, the special order is usually available at a price below the company's quoted market price for its products. Say, for example, if the selling price of a company's product is 100 naira, special order may be offered at 80 naira or 90 naira. What is important is that the price to be quoted for the special order is usually lower than the company's market price for its product. Then three, the company will utilize idle capacity. There is available idle capacity, meaning that the company is currently operating below the installed capacity. If the company has capacity to produce 100%, maybe currently the company is producing 80%. That means there is idle capacity of 20%. So it is from that 20%, the company is going to execute the special order. The reason being that you don't want any situation, you don't want anything that will disrupt the normal operation of the company. Okay, so as a result, this special order, it is assumed that the special order will utilize the idle capacity to execute. So that is basically what acceptance or rejection of a special order is all about. However, in making decision under acceptance or rejection of a special order, you will need to analyze the special order critically in two different angles. You are going to look at the economic angle as well as the qualitative factors associated with the special order. For the economic angle of the special order, it involves the process of comparing the sales value arising from the special order with its associated relevant cost. Just compare the sales value that will come out from the special order minus the relevant cost that will be incurred for the purpose of the special order. This means that any cost that is not related to the special order, even if it has to do with the company's normal operation, provided it is not related to the special order, should not be considered. Now, there are two different ways in which examiner can test you as far as economic analysis of the special order is concerned. There are two different ways. If in the question you are given selling price or sales value of the special order, that means examiner wants you to determine either profits or loss associated with the special order. Two, it is possible examiner may want you to determine minimum price to quote for the special order, or you may be asked to determine the price to charge for the special order, or examiner can also ask you to determine relevant costs that the company will incur as a result of the special order. So in as much as you don't have profit, you don't have selling price or sales value attached to the special order. So what that simply means is that examiner wants you to determine relevant costs. But once you have selling price or sales value from the special order, that means you must determine profit or loss. So what I'm now saying in essence is that when you want to carry out your economic analysis or incremental analysis, all you need to do is to compare the sales value associated with the special order with the compare it with the relevant cost of making the special order. So you can use this formula you have, the format you have below to do that. So you go to the question, you go and pick the sales value. If you have given the sales value of the special order, you put it there. But if you are not given the sales value, you may be given selling price and the unit to be sold for the special order. So you just multiply the unit with the selling price, so you get the sales value. Then you now consider relevant cost of making the special order. Under the relevant cost, you may have direct material, you may have direct labor cost, you may have direct expenses. It is also possible you may have variable production overhead. All right. It is possible you may have incremental fixed cost. Okay, you may be given incremental fixed cost. Not only that, you can also have direct, specific. Okay, you can have direct slash specific slash attributable fixed cost. Attributable fixed cost associated with the special order. So when this happens, whatever the cost that the company will incur as a result of the special order, you must consider it. Then again, it is also possible that the company will be the one that will deliver the special order to the customer. All right. So in this case, the company may incur freight cost or transportation cost. Okay. So any other relevant cost that is associated with the special order, you consider it. Add up all the relevant costs together, you less it from the sales value. So you can either have profits or you have loss. Okay. Now, if it is profit, at this point, you need to make a decision. All right. If it is profits, if the special order will result to additional profit to the organization, your advice should be that it should be accepted. But if the special order, if the company will incur loss as a result of undertaking the special order, the advice should be that they should not accept the special order. Now, what if the sales value, okay, what if the sales value equal to the total relevant cost of making the special order, such that you are going to have zero here? So if the sales value equal to total relevant cost of making the special order, the company can either accept or reject the special order depending on other qualitative factors. So in this case, we need to move to the second part of the analysis, which is to determine the qualitative angle of the decision relating to the special order. Now, there are some critical questions that will be asking for answers that the company will need to provide answer for. Number one, you need to ask, do we have available spare capacity to undertake the special order? So you need to confirm that there is spare capacity to, because you don't want anything that will disrupt your normal operation. Therefore, it is only that your spare capacity that you want to use to execute the order. Therefore, you need to confirm if you have available or sufficient spare capacity to undertake the job. At times, your spare capacity may not be enough to undertake the order. So you must first of all confirm before you accept the order if you have sufficient capacity to undertake it. Then two, you also need to ask the question, is it certain that fixed cost will remain constant within the relevant range? That is, the fixed cost will not change as a result of undertaking the special order. So if the fixed cost will change, then the additional fixed cost that will be incurred as a result of undertaking the special order is relevant. You need to account for it. But assumption is that the fixed cost will remain constant within the period under consideration. Okay. Then number three, you also need to ask the question, is there any profitable ways of utilizing the idle capacity? Okay. Is there any other profitable way of utilizing the idle capacity instead of the special order? Okay. Because it is possible you have another venture that can yield a higher profit to the organization using the spare capacity instead of the special order. So you need to ask that question as well. Then another question that needs to be answered is that will lowering the selling price attract other customers to want to quote for the same thing? Because at times, if a customer approach you and you lower your price for such customer, the customer may inform other person, maybe friends, colleagues, neighbors, and all of that. Oh, I bought it at so much price, because it's a one-time order. That customer is not going back to the company again because we said it's a one-time order and is often involving a large often involve a large quantity. So you are not going back to the company again to go and buy it, because it's a one-off order. So if that customer tells another person or another customer or another maybe neighbor or friends or colleagues, all right. So with lowering the selling price for that customer, attract other person to want to come and quote for the order. This is what we are trying to say. So these are the things, these are the factors that you need to take into consideration as far as special order decision is concerned. Okay. Now, this particular format, this format I've given to you that you have here, all these formats can only be used if in the question you are given selling price or sales value for the special order. Like I mentioned to you, there are two different ways examiner can test you. So if in the question you don't have anything like selling price or sales value, so that means you need to determine the relevant cost of making the special order, or examiner can ask you, calculate the minimum price to quote for the order. What is the contract price that should be charged for the special order? So you must know what you are doing. So in a situation whereby examiner just wants you to calculate minimum price to quote, you should know that all what you need to do is to just determine the relevant cost. So this is all and all as far as special order decision is concerned. Okay, so at this point, let's have a illustration. Okay, let me know if you have any question for me before we move on. Okay, so let's have illustration. Let's have illustration. Yes, I need somebody to, let's start with illustrate. We are going to solve two illustrations. So let's start with this illustration number one. I need somebody to read, please. Who will help us? Imam, you want to try?
Okay. Congo Below Limited receives a special order to supply 2,000 units to Lagbaja. The order will utilize the available idle facility that was purchased 6 years ago. At the time of receiving the order, the net book value of the idle facility is 2 million naira, while the market value is 1.2 million. If the machine is utilized for executing the order, its market value will drop to 1 million. The order will take 2 months to complete. The order will require material ABC bought for 150,000 naira 4 years ago. It is identified that material ABC can also be put into an alternative use at a cost of 60,000 naira, while the current market price value is nil. The order will require 4 casual workers at a monthly remuneration of 8,000 naira each, and the service of a supervisor that currently earns 40,000 naira per month. The supervisor is to utilize 60% of his normal time in working to execute the order. Management ascertains that the business will suffer a monthly contribution of 80,000 naira if the supervisor is to transfer 60% of his working time in executing the new order. The supervisor is equally to be paid a monthly bonus of 10,000 naira because of the additional efforts needed to achieve on-time delivery. At present, monthly maintenance cost is 25,000 naira, while that of the administration is 20,000 naira. If the order is accepted, the two costs will increase to 35,000 and 28,000 naira respectively. Required: determine the minimum price to accept for the order. B. State the basics you adopted for your computation. Show all working.
Thank you, Imam. Yes, that is the question. Examiner wants you to determine the minimum price to accept for the order. So, which means that this question does not have anything to do with, the question does not have anything to do with sales price or selling price. So in this case, we want to determine the relevant cost of this special associated with this special order. So we are going to be solving it paragraph by paragraph. So you need to interpret the scenario as printed. Okay, so I will stop sharing this and move to the working note quickly. Okay, so solution to illustration 1, page, I think that's page 37, or which page?
Page 37.
Thank you, page 37. Page 37. All right. So the name of the company is Conco below Limited. Number A, requirements. Examiner is asking you to determine minimum price. You then say minimum, or you can say determination of minimum price, or just simply put minimum price. So let's go to the body of the question, paragraph by paragraph. Open to the material at your end. Conco Below Limited received a special order to supply 2,000 units to Lagbaja. So the activity level is 2,000 units. That's what the examiner wants to supply. I mean, the examiner, the company wants to supply to the customer. The order will utilize the available hydro facility that was purchased 6 years ago. At the time of receiving the order, the net book value of the hydro facility is 2 million naira. So that 2 million naira, is it relevant or irrelevant? Let's do it together. You have to participate. Why is it not relevant?
It's a stock cost.
It's a song called past cost.
Who is talking? If you want to talk, you know the rules. You raise your hand. So, who is raising hand? Nobody.
Yes, sir, Mr. Dijuwon.
Who is raising hand? Raise your hand. Don't talk. Raise your hand first. Yes. How do we treat the 2 million naira net book value of the idle facility? How do we treat it? I can't see your hand though. Yes, Oliver, go ahead.
Yeah, the net book value of the facility is 2 million naira is irrelevant.
Why?
Because it has been incurred in the past. And regardless of whether the order is accepted or not, it still remains the same.
Okay. Any other person? You can put down your hand. Any other person? Okay, so that means you're aligned with Oliver. Yes, it is true that the 2 million naira, the net book value of the hydro facility of 2 million naira is irrelevant. Moses, yes, go ahead.
So I don't need to say any other thing. I concur with him.
It's all right then. So, like I said, the net book value of the idle facility of 2 million naira is irrelevant. It's not because it's a passcode that is irrelevant. The reason why it's not relevant is because it's an historical cost. Yes, Osioma. Osi, yes, talk to me.
So here I'm seeing something like the order will utilize the available idle facility that was purchased 6 years ago.
Yes.
So I'm feeling that like it will be used for this particular project, in as much as is an irrelevant cost.
It will be, whether it is used or not, what is important is that that idle facility was purchased years ago. Remember, relevant costs must relate to the future. irrespective of whether you want to use it for this project or not, provided the cost has been incurred previously, it's irrelevant. Okay? Your
Okay.
cash flow, your cash flow must relate to the future. Any cost that have been incurred in the past is a sunk cost. It's irrelevant. But in this particular instance, this idle facility, your examiner did not give you the original cost. You are given the net book value, your balance sheet value. So that net book value is an historical cost and should be ignored. It's not relevant. So that's that. Then the next one, why the market value is 1.2 million naira. If the machine is utilized for executing the order, its market value will drop to 1 million naira. So how do we treat this? How do we treat the market value? 1.2 million, 1 million naira, or how do we treat it? Yes, Oliver, talk to me.
Yeah. Since the market value will drop as a result of usage, so it is relevant. So what we have to do is that we have to take into consideration the loss of economic value of that asset, which is 200,000 naira.
Okay. So any other person, do you have any different opinion from what Oliver just said? Okay. So that's that. So in this case, of course, Oliver has answered the question. The market value of 1.2 million or the 1 million naira given to you is irrelevant. Why? Examiner did not even tell you that the facility will be disposed of. You are not told. You can only consider market value or disposal value or scrap value or resale value or net realizable, whatever you want to call it, provided you are told that it will be disposed of. Since you are not told it will be disposed, then of course it's irrelevant. However, you are not told that the machine will utilize, if the machine is utilized to execute the order, the market value will drop by 200,000. So that 200,000 is relevant. You need to account for it, because if not, because you use the machine for this special order, the value will still remain at 1.2. So you need to consider that. Put it down. Idle facility. Naira. Naira. Then idle facility. Loss in value. Okay, I need space. Let me just put idle facility, put a bracket. 1,200,000 minus 1 million. That's 200,000. So that is what this contract or this special order consumed in the value of the machine. Let's move to the next one, please. Paragraph 2. The order will require material ABC bought for 150,000 naira 4 years ago. That 150,000 naira, relevant or irrelevant? If you know it, raise your hand. Ablatif, go ahead.
It is irrelevant, sir.
Why?
It's a past cost. The cost that have been
It's
incurred in the past, some
a
cost.
sunk cost. Okay, the 150,000 naira is a sunk cost, therefore irrelevant. These are your assumptions. So then next, it is identified that material ABC can also be put into an alternative use at a cost of 60,000 naira, while the current market value is nil. That's 60,000 naira, relevant or irrelevant? If you know it, raise your hand. 60,000, relevant or irrelevant?
That's an irrelevant, because alternative to use is not what we are concerned about. We are concerned about this order.
Okay, no
It
worries.
is relevant.
Moses,
It is relevant.
Moses, you raise hand.
Yes. Hello, Mr. Adejuwon. Yes.
Yes.
It is relevant, sir.
Why?
Because that's what we can do. We can use this amount currently for this order.
Okay.
So it is relevant.
Okay, thank you. Then Oliver, we
Yes,
have two
it is
different.
relevant. Yeah, it is relevant to this
Why?
project because it has alternative use, and we are told that opportunity costs are relevant in decision making. So
All right.
if we,
So
yeah,
the 60,000 naira is relevant. So you come here, material A, B, C. Moses, put down your hand. You are done already. So material A, B, C. If you like, you can say alternative use. Alternative. $60,000. You have to state all relevant assumptions. Number next. The order will require 4 casual workers at a monthly remuneration of 8,000 naira each. Casual workers of 8,000 naira, monthly remuneration, relevant or irrelevant? Yes. Casual workers. Yes, Moses, talk to me.
Yes, yeah, it is relevant because
Why?
I think wages is really in relevant costing. Wages is relevant. So because these people are not our what's it called? They're not our staff. They are casual workers. You can just pay them for this project, and after that, we are not retaining them. So we just pay them one off, and they will go. So I believe it is relevant, sir.
Okay. So any other person? Any other person? Okay. So it's true. Casual workers are those workers that will be directly involved in producing the special order. All right. They are not regular employees of the company. So the cost you pay to them is relevant. So that 8,000 naira is relevant. So I will then come here, labor. You can call it labor or casual workers. We are told that 8,000 naira will be paid to 4 of them each. There are 4 of them. Then what's the period of the contract? 2 months. You have to be very careful. If you multiply 8 by 4 without considering the period of the contract, that means you are wrong. So this will be 64,000. Next item, please. Still on the same paragraph. And the service of a supervisor that currently earns 40,000 naira per month. Supervisor cost 40,000, relevant or irrelevant?
Irrelevant.
You did not raise your hand until you raise your hand. Relevant or irrelevant? Alexa, yes?
Irrelevant, sir.
Why is it not relevant?
Because even the job is not executed, we still this is like a fixed cost. We're still paying him.
Okay. So what you are saying is that irrespective of the decision taken on this contract, that supervisor cost of 40,000 naira must be paid. Okay.
Yes, sir.
All right then. So because of time, yes, the 40,000 naira, the supervisor is a regular employee of the company. The salary paid to the supervisor is a fixed cost on a monthly basis. Therefore, irrespective of whether this order is executed or not, you have to pay that money. The 40,000 naira must be paid. Therefore, it is not relevant. You ignore it. Okay? Still on the same paragraph. The supervisor is to utilize 60% of his normal time in working to execute the order. Management ascertained that the business will suffer a monthly contribution of 80,000 naira if the supervisor is to transfer 60% of his working time in executing the order. 80,000 naira monthly contribution, relevant or irrelevant? Yes, Ablatif.
It is irrelevant, sir,
Why?
because it is if the project is taken, it's a contribution loss, like you have taught us, and the contribution loss is relevant to the.
Okay. So any other person, thank you. Any other person? The 80,000 naira, is it relevant or irrelevant? All right, so that means every one of you, you align with Abdulatif. Okay, then. Of course, it is true that that 80,000 naira represents a contribution loss because examiner has already told you that if the company transfers 60% of if the company transfers 60% of the working time of the supervisor to execute the order, the company will suffer a monthly contribution of 80,000 naira. If not because of this contract, of course, the supervisor will still be working 100% in his normal on his normal activity. But because of this
Why did you see the
project,
last one? Did you see the last one or you picked another one?
Moses, well done. Oliver, mute. So because 60% of the supervisor working time is transferred to execute the order, the company will suffer a contribution of 80,000. So that's a contribution loss. So it should be part of the cost of the project. So I will then come here contribution loss. ₦80,000 per month multiplied by 2 months for the period of the contract. That's 160,000. Next item. Still on the same paragraph, the supervisor is equally to be paid a monthly bonus of 10,000 naira because of the additional effort needed to achieve on-time delivery. Bonus of 10,000, relevant or irrelevant? Yes, Abdulatif.
It is relevant, sir.
Why?
Because the bonus will come up as a result of this project. If this project is not taken, the bonus will not have even arisen.
Okay. So any other person? Any other person? All right. So it means you align with Abdulatif. Of course, the bonus of 10,000 naira per month is relevant to achieve on-time delivery of the order. So bonus 10,000 naira per month multiplied by 2 months. That's 20,000 naira. Let's move to the next one. At present, monthly maintenance cost is 25,000 naira, while that of administration is 20,000 naira. If the order is accepted, the two costs will increase to 35,000 and 28,000 naira respectively. So the monthly maintenance cost and administration costs, are they relevant or irrelevant, Abdulatif?
We only consider the increase as a result of this project.
Okay, so meaning that the existing cost of 25,000 and 20,000 are irrelevant. What
Yes,
is
sir.
relevant is incremental. All
Yes,
right.
sir.
So any different opinion to that? Any different opinion? So you're aligned. Let's move on. So I will then come here, incremental cost. So under the incremental cost, we have maintenance. For maintenance, the current maintenance cost is 25,000. It has increased to 35. So therefore, 35,000 minus 25,000. All right. Then multiply by 2 months. So what do you have there? That's 20,000. Also, we have administration costs. The administration cost has increased to 28,000 from 20,000 for the period of 2 months of the contracts. That's 16,000, 8,000 times 2. What else? I think that's the last one. Yes, that's the last item. So let's add up. Add up everything. What's the total? That's the minimum price. What do you have?
So I have 540,000.
540,000. 540,000. Okay, so that's that. Examiner is asking you to determine the minimum price to accept for the order. So you can then say the minimum price, that Conco below limited should accept for the order is 540,000 naira. If you like, you can say representing 540,000 naira, representing the total relevant cost of executing the order, executing the special order. That's that. The number B part of the question, the examiner wants you to state all your relevant assumptions. Again, like I usually tell you, whether examiner asks you or not, you need to state your assumptions. So, assumptions. What assumptions have you made in your calculation? So you can say the calculation above is based on the following assumptions. Okay, so you then go back to the question, paragraph by paragraph. What assumptions have you made? Assumption number one, we are given idle facility. How did you treat your idle facility? Please, the assumption is not something you are going to fabricate. It's already in the question. Just go to the question. How did you treat each line item? That's what the examiner wants you to know. So the first item is idle facility. Under the idle facility, let's go back to the question together. How did you treat it? Under the idle facility, we are given the net book value of 2 million naira. We said it's not relevant because it's an historical cost. Therefore, you then come here, the net book value of the idle facility of 2 million naira is an historical cost. Therefore, not relevant to the calculation. That's that. Let's go back to the paragraph. Still on that same paragraph, you are given market value of 1.2 million and then 1 million naira. So what did we do? In addition, the market value, or you can just say the only relevant cost, the only relevant cost associated with the idle facility is the loss in value of 200,000 naira, representing the difference between the market value of 1.2 million and 1 million naira. So we are done with that paragraph. Let's move to the next one. In the second paragraph, we are given material ABC bought for 150,000 naira 4 years ago. We said that 150,000 naira is a sunk cost, therefore irrelevant. So you then come here. Assumption 2, material ABC. So what did you do? You then state the cost of material ABC. Material ABC of 150,000 naira bought 4 years ago. It's a sunk. You can't just say it's a past cost. You need to say the terminology, which is sunk cost. Don't use past cost. It's a sunk cost. It's a sunk cost. Hence, not relevant to this calculation. Okay. What else did we say in that paragraph? We then say that the only relevant cost associated with the material ABC is the cost of the alternative use of 60,000. If you want to add that one, you can put it there. The only relevant cost associated with material ABC is the cost of alternative use of 60,000 naira. If you want to go further, you can say this has been included in the calculation, but just ignore. Move on to the next one. No time. No need to be writing too much of story. Just make your point and move on. The next paragraph, paragraph number 3, we are told that the order will require 4 casual workers on a monthly remuneration of 8,000. We said that casual workers of 8,000 naira is relevant. So if you like, you can put it down. If you like, you can just move on. Okay, so let's put it down. Casual workers. The monthly remuneration of 8,000 naira for the casual workers. For the casual workers is relevant since they will be directly involved. They will be directly involved in executing the order. Okay. So we've already said it's relevant. So let's move on. No need to write too much of story. You don't have time on the day of the exam. Next item, we also have supervisor cost of 40,000. So you can say number 4, supervision. Okay. The monthly supervisor cost of 40,000 naira is irrelevant because irrespective irrespective of the decision taken on the contracts, irrespective of the decision taken on the contracts or on the order, irrespective of the decision taken on the special order. Command, the supervisor will be paid. So it's not relevant. Number next. We also have, still on the same paragraph, we also have monthly contribution. So we have contribution loss. Number 5, contribution loss. The monthly, what's wrong with you? The monthly contribution loss of 80,000 naira as a result the monthly contribution loss as a result of the supervisor of as a result of transferring 60% of the supervisor's time to execute the order. The order is relevant. This has been included in the calculation. So if you like, you can also talk about the bonus. Number 6, bonus. Okay. The bonus, the monthly bonus of 10,000 naira to achieve on-time delivery is relevant. Okay, so no need for too much story. Number 7, incremental cost. This is the last one, incremental cost. Under the incremental cost, we said that the maintenance cost, the current maintenance cost of 25,000 and administration cost of 20,000 naira are irrelevant. The only relevant cost or only the incremental cost, only the incremental cost of 10,000 naira, only the incremental cost per month only the incremental cost per month of the maintenance and admin costs of the admin are relevant and included in the calculation. So that's that. So that's the end of the question. Until you do this, that's only when you are going to earn your full mark. So when you are stating your assumption, it's not compulsory that you have to state your assumption the way I've said it. No, we are different people with different with different capacity. The way I articulate points is different from the way you are going to articulate your own points. So the way you understand it, that's the way you should put it. Don't go and be memorizing it and think that this is how it will be on the day of the exam. No, the question scenario of question will surely be different. What is important is that you need to state your assumption. When you are stating your assumption, just go to the question. How did you solve the numbers? All right. Okay. You don't cram assumption. You don't cram it. It's based on how you treat your number. That's what the examiner is asking you to do. Okay. So that's end of the question. Let's have one more. Just now we have spent almost 1 hour. All right. So let's have one more additional question. So that will be all. So this one has to do with minimum price. Let's have a question that relates to where you have sales or selling price or contract price that will enable us to calculate profit or loss. Okay, let me know if you have any question for me before I switch. Do you have any question? So if there's no question, let me stop sharing this and move to the working notes. Sorry, the main notes. So let's have one more illustration. Now you are going to solve, should I even give you this illustration number 2 as an assignment, or I should develop another question for you? Okay, let me give it to you as a bonus. Go and solve illustration number 2. Solve illustration number 2 for me as an assignment, and you have to submit not later than February 19th, 11:59 p.m. February 19th, that is this coming Wednesday. If you submit 12 a.m., I will not accept it from you. All right. So I need time to review it and then get back to you. So 11:59 February 19, 2025. You need to solve the question and submit. All right. Illustration number 2 on page 37. Okay. That's it. So let's have one more illustration. Yes. I need somebody to read illustration number 3. Hold on. There are some people here that have been quiet since. You don't contribute, you don't give number, you don't do anything. I have Uchena, Amarachi has not commented. Esther has not talking. Lukman, Muibat, Mary has not talked. Then Janet has not contributed. Jacinta is the same thing. Oh yeah. Let me start from however I want. Amarachi, please read. Amara.
Hello, sir. Good afternoon, sir.
Good day. How are you?
I'm fine, sir.
Yes. Go ahead. Read.
Okay, sir. Scodeto Limited. That name I don't really, but okay. Scodeto Limited is a pharmaceutical company operating from Enugu, Nigeria. Recently, the company received an order from Eimba Football Club to produce a technological device for the treatment of Goron injury. The contract is expected to be completed in 1 year's time at a contract price of 3 million naira. Currently, the company has spent 400,000 naira on research and Development, and an additional cost of 250,000 on market survey to promote the device to the other football clubs in Nigeria. The following additional information relates to the contract. Materials. The contract will require material Cinco. This material was bought 2 years ago at a cost of 600,000 naira. The material is toxic, and if not used for the contract, it must be disposed of at a cost of 50,000 naira. Labor. Skilled labor is hard to recruit in the labor market. In the recent management meeting, the sales manager suggested that 2 workers from production department on a current wage of 400,000 naira can be transferred to execute the order. The production manager does not buy the idea because he believes that transferring 2 of the existing staff to execute the contract will lower productivity. The management resolved that the staff should be transferred since the company is finding it difficult to recruit additional staff. However, if this happens, the management believes that sales will drop by 1,500,000 naira at a marginal cost of 1 million naira. Production overhead. The fixed production overhead absorbed relate to labor and would amount to 200,000 naira. Research and development staff. It has been concluded that when the work on this contract is completed, the research and development department will be shut down. The R&D staff costs for the year include wages of 600,000 naira and redundancy and severance pay of 150,000 naira now or 350,000 naira in 1 year's time. Equipment. The contract utilizes a special equipment which cost 100,000 naira 3 years ago. It has a residual value of 30,000 naira in another 2 years and a current disposal value of 80,000 naira. If the equipment is used in a contract, it is estimated that the disposal value in a year's time will be 60,000 naira. Share of general building services. The contract is charged with 350,000 naira per annum to cover general building expenses. The building space is currently being used for the contract. However, a neighboring business has approached Skeduto Limited to lease the space for 1 year at a consideration of 70,000 naira. Required. Advise the CEO of Skeduto Limited if the contract should be accepted. State any assumptions made in your calculation. Note, ignore the time value of money.
Thank you very much. Yes, that is the question. Examiner wants you to advise the CEO of Scudeto Limited if the contract should be accepted, and then you also ask to state all relevant assumptions. Sir, if that is the case, let's stop sharing this and move to the working notes. We want to advise whether the contract should be accepted by Scudeto Limited or not. So let's stop sharing this and move to the working notes straight. So we are going to solve the question together. I will assume I don't know anything. You are the one that will be guiding me. Whatever you tell me is what I will put down. Okay? Yes. Solution to illustration 3. Page, is it page 38?
38.
Yes, affected.
Thank you. Page 38. All right. So examiner wants us to advise whether the contract should be accepted. Number, of course, I would then say acceptance or rejection acceptance or rejection of a special order. Okay, it's a contract. So this, I'll create 2 naira sign because in this question, the examiner has given you contract price of 3 million naira. And you also have some costs in the question. Therefore, we are going to do debit and credit side. So the first item as given in the question. So let's go back to the question paragraph by paragraph. In the first paragraph, we are told that the contract is expected to be completed in 1 year's time at a contract price of 3 million naira. That's a cash inflow. So let's take it. Cash inflow, contract price of 3 million. Next item, please. Second paragraph. Currently, the company has spent 400,000 naira on research and development and an additional cost of 250,000 naira on market survey to promote the device to other football clubs in Nigeria. So how do we treat the 400,000, then the 200,000? If you know it, raise your hand. Yes, Abdulatif.
The 400 and that of the 200 for research and development, they are being incurred. So they are sunk cost.
They are sunk costs. Thank you. So no further opinion is needed on that. You will recall that when I was giving you the notes, I gave you the example of some costs, which include market survey costs, research and development costs, or feasibility study fee. These are examples of sunk costs. Any costs that have been incurred in the past, okay, they are irrelevant, should not be considered. Therefore, this 400,000 and the 250,000 should be ignored. I'm not going to state the assumption on this one, though. It's a waste of time. So you should already know what to do. All right. Then next, the following additional information related to the contracts. Material. The contract will require material zinco. This material was bought 2 years ago at a cost of 600,000 naira. So 600,000 naira, relevant or irrelevant?
Irrelevant.
Abdulatif, go ahead. You are the first to raise hand.
Irrelevant, sir.
Why?
The sunk cost.
Because if there's some cost, it has been incurred already.
Okay, it's all right. So the 600,000 is irrelevant because it's a sunk cost. Next, the material is toxic, and if not used for the contract, it must be disposed of at a cost of 50,000 naira. 50,000 naira, relevant or irrelevant? Who was the first to raise? Who was the first to raise hand? Abdulatif was the first person. Oh yeah.
Sir, you give opportunity to other people, sir.
Okay, Oliver. Is that Oliver or Moses?
Whichever person that wants to answer should go ahead. Aside Latif.
Oh yeah, Abdulatif. People don't they jealous you. Moses, oh yeah, go ahead. 50,000.
So, it's relevant, sir, because it's a savings to the company.
It's a savings. It's a savings. So for the benefit of those that are, if you are not in the class when I was taking relevant costing, disposal value will always represent a saving to an organization. All right. So irrespective of the nature of the disposal, whether of the material, whether it is toxic or hazardous, whatever the examiner has used to convince you, provided the material will be disposed of, then it is it is a savings to the organization because disposal value will always represent a saving. So it is not a cost. Examiner will never tell you that it's a saving. Surely they will always tell you that it will to be disposed of at a cost. When you look at all the scenarios question that we have had previously that relate to this, it's always the same thing. They will tell you it will be disposed of at a cost. It is not a cost, rather it's a saving. So this 50,000 naira will represent a saving. So let's put it down. Material Zinco. I'll just say disposal value. Disposal value. For what? Material Zinco. 50,000 to be on the credit side because it's a cash inflow. All right. Move on to the next one.
So your bracket is
No.
okay. It's on the credit side. Okay.
Yeah. So the intention is that all the cash inflow will go to the credit side. The cash outflow, all the relevant costs will be on the debit side. Then we'll find the nets.
That's fine.
Okay. The following additional information relate to the contracts. Materials. The contract will require material Zinco. I think we have done that. Labor. Skilled labor is hard to recruit in the labor market. In the recent management meeting, the sales manager suggested that 2 workers from production department on a current wage of 400,000 naira can be transferred to execute the order. 400,000 naira for the 2 workers that will be transferred to execute the order. Is it relevant or irrelevant? Ablatif.
Irrelevant, sir.
Why?
Because it's either it's a fixed cost already. Either the project is or not. So.
Okay, whether we execute the project or not must be incurred. Yes, Moses, do you have a different opinion? Moses, you raise hand. Moses.
Hello, sir. I did not unmute myself. So
okay.
I think it's relevant, sir.
Why?
Because these people now, it's as if we are treating them as a casual worker. We are transferring them for this project alone. Yeah. Once they are done with this project, then they will resume to their normal employment or their normal contract. But for these projects, we are going to treat them as a casual worker. So it is relevant. The 400 should be.
Okay, I need one more person. It is 1-1 for now. One person said it is irrelevant. Another person said it's relevant. Don't send me the chat. I would prefer you talk. I want to hear your sweet voice. Yes, Oliver, talk to me.
Yeah, the 400,000 naira paid to these 2 people is irrelevant. Because
why?
Whether the contract is executed or not, they definitely will be paid that money.
Okay. Yeah. All right. Janet is saying because they are part of the cost for this project, it is relevant. Okay. All right. I always like you to speak up because I want to hear your sweet voice. Okay. So the 400,000, pay attention to what I'm about to say. Oh, I want to give a verdict. Yes. Somebody is sending another chat. Okay. Now, this 400,000, look at, pay attention, please. You see, there is different, you need to understand that there is difference between wages and salaries. Okay? There is difference between wages and salary. Wages is just like direct labor. People that will be directly involved in executing the order. Okay? The money you pay to those people that will be directly involved in executing the order, that's your direct, you can call it direct wages or direct labor. An examiner also mentioned workers here. The fact that they even mention workers is not even the main thing, but for the fact that it is called wages. If it is salary is the one that is paid on a monthly basis. Wages is not the same. Wages is not paid on a monthly basis. So if examiner has used salary, then you can say, okay, this is fixed in nature, therefore non-relevant. But examiner has used wages because of that terminology, wages, then it means that this 400,000 naira is relevant. You need to account for it. It's a labor cost, a direct labor cost. all right, irrespective of whether you are transferring from one place or other, provided examiner has used current wage, all right, so it is relevant. So let's include that. I will come here, labor. Labor cost, 400,000. Let's move on. Still on the same paragraph. The production manager does not buy the idea because he believes that transferring the two of the existing staff to execute the contract will lower productivity, okay? The management resolved that the staff should be transferred since the company is finding it difficult to recruit additional staff. However, if this happens, the management believes that sales will drop by 1.5 million naira at a marginal cost of 1 million naira. So how do we treat that information? Oliver, yes?
There's a loss of contribution here as a result of transferring that to labor to the new contract. So it is relevant. The loss of contribution of 500,000 naira is relevant to this project.
Okay. Any opinion? Thank you. Any different opinion? All right, that means you're aligned with Oliver. It is true that examiner has told you that sales value will drop by 150,000 naira at a marginal cost of 1 million naira. So the marginal cost is the same thing as variable cost. Therefore, sales of 1.5 million minus variable cost of 1 million naira, there's a contribution of 500,000 naira that will be lost as a result of that. So put it there, contribution loss. $1.5 million minus 1 million. That's 500,000. Okay, move to the next one. The next paragraph, production overheads. The fixed production overhead absorbed relate to labor and would amount to 200,000. Yes, fixed production overhead of 200,000, relevant or irrelevant? Moses, yes?
Yeah, according to what you taught us, I think any assumption is irrelevant. Overhead assumption is irrelevant.
Okay. Any other person? Thank you, Moses. Any other person? So that means you're aligned with Moses. Now, the issue is that, we have two types of overhead. We have variable overhead and then fixed overhead. Only variable overhead is relevant. Fixed overhead is irrelevant.
It's irrelevant.
So irrespective of decision taken on this contract, the fixed production overhead will surely be incurred. Examiner possibly, you are told that will be absorbed, will be absorbed on the direct labor hour. So in this case, because the examiner has mentioned labor, an average student will think that maybe labor is a direct cost, therefore it is relevant. No, it is not relevant. All right. Any fixed overhead is irrelevant because whatever the decision made on this contract, it will not change. Since it's not going to change, therefore it is irrelevant. Okay. So you ignore it. Move to the next one, research and development staff. It has been concluded that when the work on this contract is completed, the R&D department will be shut down. Remember, this contract will be completed in 1 year's time. So the R&D staff costs for the year include wages of 600,000 naira. That wages of 600,000 naira, relevant or irrelevant? Yes. Moses, go ahead. Unmute yourself, I can't hear you.
Sorry, sir. So I said it is relevant because
Why?
according to the question, it said the R&D staff cost for the year include wages of 600 because it is
Okay.
wages, so it is relevant to this project. And we're going to account for it.
Okay, Alexa, yes. You raise hand, Alexa.
Irrelevant, sir,
Why?
because it's a part of some cost, research and development.
Is an example, did you say it's a sunk cost?
Yes, sir.
Okay. All right. Yes, any other person? Oliver, you also raise hand. Talk to me.
Yes. I have a different view to this. The research and development cost mentioned here is irrelevant.
Why?
It's more or less like an administrative cost. It is not peculiar to this contract. So whether we
Okay.
execute this contract or not, the research and development cost may likely go off. The research department may likely be shut down as a result of. Yes, I don't think it's. I don't think it's relevant. Yeah.
It's all right. Thank you. Yes. The R&D costs. Examiners also mentioned to you that the R&D cost for the year include wages of 600,000. That means there are more than 600,000 naira in the R&D staff cost. There are more than 600,000 naira in the R&D staff cost, but you are told that the R&D staff cost include wages. I just told you a few minutes ago that wages is like direct labor. So, and you guys are still saying that 600,000 naira is irrelevant. I know maybe your confusion is because it is R&D, because they mention R&D. All right. So you are not looking at the context. This is wages. So you are told that R&D staff costs for the year include. That means there are other costs apart from this 600,000. There are other staff costs. So they now single out wages of 600,000 out of it. So the 600,000 is relevant. You need to account for it. So I will come here, R&D. Please mute. R&D, wages, 600,000. Next item. And redundancy and severance pay of 150,000 naira now or 350,000 naira in 1 year's time. How do you treat the redundancy and severance pay of 150 or 350,000 in 1 year's time? So how do we treat it? If you know it, raise your hand, please. Okay. I don't want anybody to even raise hands. Let me call those people that have not contributed. Yes, Esther. Esther, please tell us, how do we treat that information? Timilayo, Esther. Yes?
Hello, sir. Good evening, sir.
How are you?
So
Yes,
I'm not
talk
really
to me.
sure, but I feel it's irrelevant, sir.
So which of them? We have two numbers.
Yes, the redundancy.
150,000 naira now or 350,000 in 1 year's time. How do we treat it?
The now one is irrelevant. Why the one in years time, the 350,000 is relevant, sir.
So the 150,000 is irrelevant, but the
Yes, sir.
350,000 is relevant. Okay?
Relevant.
All right. So you can mute. Let me go for another person to see a different opinion, if any. Yes. Lukman. Lukman, how do we treat that information? Hurry up, hurry up. Yes, Lukman, are you still there? Lukman. Okay. Yes, Osioma, how do we treat that information? Osi.
Okay, I think that is the 350,000 is relevant, meaning that the contract is expected to be completed in 1 year's time.
Okay. All right, thank you. Let me look for that's 2-0. That's 2-0. Let me look for one more person. No, don't raise hand, Oliver. I need people that have not contributed before. Let me see. I think Mary is just joining us. Let me see. Esther has spoken. Oshiaman has spoken. Lukman has refused to talk. Alexa, don't raise hand. You've contributed. Yes, Jacinta. Jacinta. Yes. Jacinta. Cinta, baby, are you not there? So you remain silent now. Okay.
Hello, sir.
Yes. Yes, talk to me.
Please, the thing is that I'm attending to my baby. I'm just listening, but not actually looking at the inside the question.
It's all right. Don't worry then. Since you are distracted, don't worry. Yes, Janet, talk to me. Janet, how do you treat that information? We have 2-0. Two people have suggested that 350,000 is relevant. The 150,000 is not relevant. Do you have a different opinion, Janet? Janet.
Yes,
Okay.
yes, sir.
So, yes, how do we treat it?
I feel it's not relevant to me too.
It's not relevant. Okay.
Yes.
Why is it not relevant?
Because I feel it's associated to.
And
Okay,
which
I
of
feel
the
the
numbers
cost.
is not relevant? Is it 150 or 350? How do we treat it?
Okay, first of all, I feel relevant cost is the redundancy cost is relevant, and why the how do they call it? The severe cost is not relevant.
The two of them are together. Redundancy and severance pay, they are together. So it can either be 150 or 350, or how do you treat it? So, yes, somebody raised hand the other time. Thank you, Janet. Somebody is chatting. Let me see. Okay, Janet is Janet. Now, Alexa, yes, talk to me. How do we treat it?
Is it not the difference of 150 and 350? Only 200 we recognize.
So take it again. How do we treat it?
The difference of 150 and 350, which is 200.
Why do you say so?
Because the 150 is considered as a redundancy, while the severance pay is we are giving an option of 150 or 150 now or 350 within the 1 year.
Yeah.
So the difference, I think, 200 to be recognized.
Okay. So thank you, Alexa. You can put down your Mary. Yes, you raise and talk to me, Mary.
I joined very late, but from seeing what people are doing since I joined, I think it's for the year the 360 is relevant because
The 350. Yeah.
350 because the 150 already is already inside that 350. So that's what I think.
Okay. It's all right. So the 150 is irrelevant, but the 350 is relevant, right? Is that what you say, Mary?
Yeah, that's what I said.
Okay, then. All right, because of time. So let's consider as far as this redundancy and severance pay is concerned. See, when you shut down the R&D department, you need to pay the workers redundancy or severance pay. If you shut it down now, you are going to pay them 150,000. But are you shutting down the department now? No, you are not shutting the department now. Therefore, the 150,000 is irrelevant. If you shut the department down after 1 year, the company will incur a severance, redundancy, and severance pay of 350. That means the cost has increased from now of 150 to 1 year's time of 350. By how much? 200,000. So why didn't you shut down R&D department now? It's because of the contracts. The contract has extended that department by additional 1 year. Therefore, how much is the company, what is the incremental cost on the redundancy and severance pay? is 200,000. That is 350 minus 150. That's the correct answer. You can't use 350 because this 350 already included 150, like one of you said. So the only relevant cost is 200,000. So let's put it down. You have to be very careful on the day of your exam how you are going to interpret the scenario. Okay, that's one of the beauty of performance management. Nobody knows it all right? But you must think twice before you put your pen to paper, how you are going to interpret the scenario. 600,000. Then come here, severance, redundancy, and severance equal to 350,000 minus 150,000. That's 200,000. So next item. Equipment. The contract utilizes a special equipment which cost 180,000 naira 3 years ago. 180,000, relevant or irrelevant? Mary, yes, talk to me. Yes, Mary. Okay. Yes. The 180,000, relevant or irrelevant? Yes, Ablatif, go ahead.
The 180,000 is a sunk cost that have been incurred.
It's a sunk cost. I think that's a general. Yes, Moses.
Yes, sir. It's the same thing I wanted to say. It's an
Okay.
historical cost. So,
Okay, so the 180,000 is irrelevant because it's a sunk cost. Ignore. It has residual value of 30,000 naira in another 2 years and a current disposal value of 80,000. If the equipment is used in the contract, it is estimated that the disposal value in a year's time will be 60,000 naira. We have 3 different values for disposal value. How do we treat this information? Somebody should tell me. Raise your hand if you know it. Yes. Yes, Alexa, go ahead.
We are taking the difference of the the savings of 20,000 naira coming from 80 to 60.
Is it a savings?
Impairment rather.
There's no impairment in the performance manager. In performance management, impairment is in
But it's disposal, sir. It's disposal.
Yes, you can see loss in value. Loss in value.
Loss in value.
Yeah, which is similar to impairment though. But then that terminology relates to financial
Loss
reporting.
in value.
Yeah. So yes, any other person? Somebody is setting a chart. I'm not used to this chat, so talk. I like to hear you. Moses, yes, talk to me.
yeah. All right, sir. I think in a way I will agree with Alexa because it will result in loss in value. With the if you check the question very well, it says because the residual value of 30,000 is irrelevant, obviously, and a current disposal value of 80,000, and estimated that the disposal value in a year's time will be 60,000. So we need to get the difference between 80 and 20. 80 and 60 that will give us 20. That means there's a reduction in value of this. What's it called?
Okay,
In a
for
way,
20,000.
Yeah, by 20,000 there will be a reduction in value.
Okay, so Alexa and Moses are correct. The 30,000 naira The disposal value of 30,000 naira in 2 years' time, that one is out of the equation. That one is irrelevant because this contract will end in another 1 year's time. So the 30,000 naira is out of it. If this equipment is to be disposed of now, the company is going to earn 80,000 naira. But they can't dispose it of now because they are going to use it for the contracts for 1 year. So if the equipment is used for the contracts, the disposal value in 1 year's time will be 60,000. Why didn't you dispose it off now to earn 80,000? Why must you wait for the next 1 year to dispose it off at 60,000? Is because of the contract. Therefore, how much has the contract consumed? The contract has consumed 20,000 naira. So there is a loss in value from 80,000 to 60,000. That loss in value should be part of the cost of the contract. Let's put it down. Equipment loss in value is 80,000 minus 60,000, 20,000. Next item, please. Yes, share of general building services. The contract is charged with 350,000 naira per annum to cover general building expenses. 350,000, relevant or irrelevant? Yes. 350,000, relevant or irrelevant?
It is irrelevant, sir.
350,000, relevant or irrelevant? You did not raise your hand. I did not call you to answer. Raise your hand first. Oliver, go ahead.
It is irrelevant, sir, because
Why?
it is an apportioned cost, apportionment.
Okay. All right, Moses, go ahead.
Yeah, it is irrelevant because it's like we've already paid for it, whether we like it or not, whether we want to do the project or we don't want to do the project. It is per annum, it's already paid for it, so it's an irrelevant concern.
Okay, thank you. Both of you are correct. So the contracts, the general building expense, you can see the terminal general building expenses. This is a common cost. It's not specific to the contracts. It's a common cost that are not apportioned to the contracts because they're told that the building space is currently being used for the contracts. So they now apportion 350,000 to the building. I mean, to the contracts, all right? Because it's a general expenses, it's an apportionment. Therefore, it is not relevant. You ignore the 350,000. Oliver, put down your hand. However, a neighboring business has approached Scudeto Limited to lease the space for 1 year at a consideration of 70,000. Okay, 70,000 consideration, relevant or irrelevant? Yes. Oliver, go ahead.
It is relevant, sir.
Why?
Because it will have been earned if the building is not used for this contract. But
Okay.
since it's for this contract, it will be lost.
Okay. So what do we call that?
Should we call that
Yes.
opportunity cost?
Opportunity cost. You are correct. It's an opportunity cost because the building space is currently being used for the contract. There's a neighboring business that wants to rent the space. So that space is not going to be rented out because the building, I mean, the contract is currently using the building space. So that's a benefit forgone. Benefit forgone is also known as opportunity cost. So it should be part of the cost of the contracts. Okay, it's part of the contract cost. I then come here, opportunity cost. $70,000. Okay, what else? Yes, that's it. That's end of the question. Look at the the pages, look at the volume of the question, look at the solution. So that's one of the beauty. Yeah, add up all the costs. So this one will be 3,050,000. That's the total cash inflow. Then add up all the costs. What do you have there?
The relevant cost is
1790.
1,790, 1,790,000. So find me the difference.
126,000. 1,260,000, sir.
1,260,000. That represents a profit. That's to Scudetto Limited. So the examiner is now asking you to advise the CEO of Scudetto Limited whether they should accept the contracts. You then say the contracts should be accepted. Since it will produce, or since it will generate additional profits of 1,260,000 to Scudetto Limited. That's it. That's not sufficient. You need to state your assumptions. And that's what examiner is also asking you. State all relevant assumptions. So you need to talk about, in your assumptions, you need to take it paragraph by paragraph according to the question. What assumption did you make under for the sunk costs, research and development costs, as well as the market survey costs? What's your assumption? Under material Zinco, what's your assumption? Under labor, what are the assumptions? So you state all relevant assumptions. All right. So I'm not going to be writing down on the screen for you. It will take our time. So we need to go ahead and at this point we end the short-term decisions. At least I'll go ahead. Let me share. Let me stop sharing this and move to. Let me just show you how to state that your assumption. Yes, Alexa, go ahead.
So, sir, this relevant cost is useful in accept and reject, make or buy, and a minimum price for special order.
Yes, it's a principle. Relevant costing is a principle. So it can apply to anything. Short-term decisions, pricing decision, even modern techniques in performance management, like ABC, like throughput. You can apply relevant costing principle in any way. All right. So it's not really,
Thank you.
yeah. So I would just want to show you guys how I solve the assumptions. All right. I just want to show you before we go to the optimal product mix. At least I should be able to introduce you to optimal product mix today. Okay. Let me see. Where is it? Okay. Let me just now in the assumption, of course, this is what you are going to say. The underlying assumptions to the above calculation are stated below. The calculation above is based on the following assumptions. Number one, research and development and then market survey costs. The R&D, I just want to show you. I'm not saying you should be writing it down. No. The cost of R&D and market survey of 400,000 naira and 250,000 naira respectively are sunk costs and therefore not relevant to the calculation. Number two, our assumption on the material The cost of material Zinco of 600,000 naira bought 2 years ago is a sunk cost and not relevant to the calculation. However, the only relevant cash flow associated with the contract is a saving of 50,000 naira arising from the disposal of the toxic material. The number 3, labor cost. The current wage bill of 400,000 naira for the true production department staff is relevant because the workers will work on the contract and must be paid. All right. In addition, the contribution loss of 500,000 naira, which the company will suffer for diverting labor, is also relevant. Okay. Production overhead, that's number 4. This will be incurred irrespective of the decision taken on the contract. Therefore, the fixed production overhead of 200,000 naira is irrelevant. Number 5, research and development staff. The staff wages of 600,000 naira is relevant. This will be saved if the contract did not go ahead. The redundancy and severance pay of 350,000 naira and 150,000 naira are irrelevant. Only the incremental cost of 200,000 is relevant. Number 6, equipment. The original cost of the equipment of 180,000 naira bought 3 years ago is a sunk cost and therefore not relevant to the calculation. The only relevant cost associated with the equipment is the loss in value of 20,000 naira. Then number 7, share of general building services. The building overhead charges of 350,000 naira per annum is irrelevant because it's an apportionment. However, an opportunity cost of 17,000 naira for lease renter is attributable to the contract. That's it. That's it. So that's what you need to say. At this point, let me stop sharing this and then I will end this class. Then we need to log in again, or you can just hold on. So let me stop sharing this so that we can do optimal mix separate video. So it will be easy to access. All right, stop sharing. Then